Hi everybody, this is Lara at Elliott Wave Stock Market with your end of the week analysis for the S&P500 for the trading week ending Friday 21st of September. For Lara's weekly members and also for Elliott Wave Stock Market members who get the daily analysis of all of the markets I'm analysing at the moment, this is the one that I have the most confidence in. I still expect that the upward structure is incomplete and I have reasonable confidence in the target at 3041 to 3045 because it's been calculated, it's a small zone calculated using two quite different analysis methods. Look out for a test of support Monday, Tuesday about 2912 and then look out for price to move up and away toward that target. I'm expecting some bearish signals to show up now toward the end of primary 3. We have waiting in the wings primary wave 4, but it's really important to assume the trend remains the same until proven otherwise. Trying to pick highs and lows is going to ensure that you may suffer some very big losses and see your account wiped out. The trend is your friend. Trading with the trend is a much easier way to try and make money than trying to pick when it's over before you've got evidence that it's over. Okay, that's my we rant over there. If anyone has questions, particularly from Lara's Weekly about this analysis, you can ask them in the comments section. I'm here to help. That's my job. At the weekly chart level for the S&P, I expect a cycle degree fifth wave is completing as an impulse. This is very obviously not an ending diagonal, and that's the only other structural option for it. When it's complete, we should be able to count the waves at the monthly chart level. So far, within cycle 5, I have primary 1 and 2 complete. Primary 3 incomplete, unfolding as an impulse, and when it's complete it should look like an impulse at the monthly chart level. At the monthly and weekly chart levels we can see the correction of intermediate 2 and the correction of intermediate wave 4, and so when intermediate 5 is done it will look like a pretty obvious 5-wave structure at the monthly chart level. So far we have intermediate 1 and 2 as a deep double zigzag, 3 as an impulse with no reasonable Fibonacci ratio to 1, 4 a regular contracting triangle exhibits perfect alternation and proportion with intermediate 2, intermediate wave 5 is now incomplete, within it no second wave correction may move beyond its start below 2594.62, but that invalidation point's quite a long way away now, and for any deeper pullbacks within intermediate 5 it shouldn't get down to anywhere near that point. It should find pretty strong support at the lower edge of this channel, but that is also too far away now. The final target I'm expecting might be met in October next year. I'm expecting October because it is a really common month for major bull markets to end or major bear markets to begin in. Cycle wave 5 may reach 2.618 the length of cycle 1. It's past 1.618, it's past also equality obviously with cycle wave 1, so I'm using the next Fibonacci ratio in the sequence for the target at 3616. If we get close to this target and the structure looks like it may be incomplete, then I will use a ratio probably at primary degree at that stage to calculate a new target. That's how I'm approaching target calculation. Rather than giving you a whole bunch of targets, I'm going to focus on one or sometimes two at a time. Let's take a look now at the structure of intermediate 5 where it begins here. This point down here, actually no, I'm very quickly going to go back to that weekly chart and just point out that when primary wave 3 is complete, I will be expecting a big multi-month consolidation, something like this, maybe a little bit bigger for primary wave 4 to remain within this teal trend channel. Copy this over from the monthly chart and I link back to those monthly charts at the beginning of every analysis each day and for each Lara's Weekly. Take a look at those charts, see how this trend line is drawn. It has provided support for all deeper pullbacks within the entirety of this bull market that began in March 2009. So for primary 4, if it gets to be that deep, if it does get this deep, it should find really strong support there. So that's waiting in the wings, but I don't think we're quite there yet because the structure of intermediate wave 5 is incomplete. When intermediate 5 is complete, it should look like a pretty obvious 5-wave structure at the daily chart level. So far, I expect we have 1212, 3434, and minor wave 5 is extending. It can't be over here pretty obviously because we've got new highs. Within an impulse, 1 or 2 of the actionary waves are waves 1, 3 and 5, 1 or 2 of those can be extended but not all 3. It's pretty obvious here that minor wave 1 is not extended, minor wave 3 is extended, and so minor wave 5 may also be extended. I'm expecting it will be. The target is for minor 5 to equal 1.618 times the length of minor 1 at 3041. That's just 4 points below the classic analysis target using a classic analysis triangle at 3045, so that small zone has a fairly reasonable probability. When Elliott waves extend, they look like a stretched out concertina. You can see the corrections within them at higher time frames. So here, this extended third wave shows its second and fourth wave corrections at the daily chart level. When minor wave 5 is complete, I'll be expecting pretty much the similar look, with minute wave 2 and, to come, minute wave 4 showing up at the daily chart level. The trend remains the same until proven otherwise. Pullbacks and consolidations are opportunities to join an upward trend when an upward trend is obviously in place. As it very clearly is here, a series of higher highs and higher lows, as I keep pointing out, is still intact. We've got new highs again with a little breakaway gap. Look out for price to curve around and test support, which now remains very strong at the lower edge of this gap. This, until proven otherwise, should be expected to be a breakaway gap. We've got a consolidation, a gap up to new highs, a movement away. Breakaway gaps can be used to set stops. Stops for long positions may now be pulled up to just below the lower edge of this breakaway gap, because if this gap is closed, then it is not a breakaway gap, it may be an exhaustion gap. But let us assume it's a breakaway gap until proven otherwise. It's a simple, logical approach to it. Within minute wave 3, if I've got the labelling here wrong, if minute minuet 1 is not over and minuet 2 unfolds, it can't move beyond the start of 1 below 2864.12. At the hourly chart level, here is the middle of minor wave 5 with the end of minute 2, and then within minute 3, minuet 1, 2, subminuet 1, 2, 3. I expect subminuet 4 to move a little bit lower to test support early next week. It may end about the 0.618 Fibonacci ratio, about 2918, but it can't move into wave 1 price territory. Below 2911.17, this target would see the breakaway gap remain open and remain providing strong support. This would be a typical breakout above a consolidation, moving up and away, curving down to test support at prior resistance before moving up and away again. Absolutely typical behaviour. This market is following really common patterns so far. Doesn't mean it has to keep doing that. We should just expect it's most likely to. That's why those patterns are common. The target remains the same here at 3041. At the weekly chart level, let's make this a little bit bigger. Here's the big symmetrical triangle that completed with a breakout. Stop doing that, thank you. With a breakout here, a back test of support at prior resistance, typical behaviour. A breakout, a back test, moving up and away, and now a series of higher highs and higher lows with an upward trend making new all-time highs, which is what the wave count has been expecting. This upward week moved price nicely high, higher high, higher low, has a slightly longer wick than an upper wick. That's not actually really enough to say that's particularly bullish, but it is quite a bullish candlestick. And very importantly, it does have support from volume. This chart is overly bullish. There is nothing bearish in this chart to tell us that this upward trend is over. Now this trend will end, but let's assume the trend remains the same until proven otherwise. Don't try and pick highs and trade in the opposite direction to a trend, because that's more likely to have large losses and wipe out your account. RSI is still neutral. There is quite a bit of room for price to rise. There's some nice bearish divergence developing now actually between price and RSI. That's absolutely what I would be expecting to see toward the end of primary 3, and then eventually after primary 4 has completed and primary 5, we're looking quite a way into the future now, primary 5 unfolds, I'll expect even more bearish divergence. The bearishness at the end of primary 5 should be unmistakable. We are not there yet. ADX reached very extreme for the prior upward trend. The triangle managed to bring it right down. It has finally caught up with the upward trend, which has been in place for many weeks. ADX is finally telling us there is now an upward trend. It's above 15. It's finally rising. The positive DX line is above the negative, and this is the strongest signal that ADX can give when it comes from reasonably low. Would prefer if it was lower, but when it comes from relatively low levels and starts to rise and comes from below both directional lines, that is a strong indication of a trend in the early stages. It's a bit laggy though, because we've obviously had a trend for quite a while. And MACD is full bore bullish. This chart is absolutely fully bullish. There is nothing bearish in this chart. It doesn't mean the trend isn't going to end. It will, and I am looking out for those signals very, very carefully every day. I do not see enough bearishness to be concerned that primary 4 must start now. Friday was an options expiration date. I'm still going to take this as an indication of bearishness for the short term. But what I think is stronger here is this consolidation had a breakaway gap and prices moved up and away. Let's expect that really typical curve down and a test of support about 2912 with support from downward movement within Friday's session. It was an upward session, but the balance of volume was downward. Stronger volume for downward movement within the session tells us to expect a little bit more downward movement when markets open early next week, and I expect a little fourth wave correction is going to find support about 2912 before price moves up and away. At the daily chart level, ADX is also telling us, well, at this stage it's not telling us there is a trend because it's a bit too low. If it reaches up to 15, then it'll be telling us that there's an upward trend in place. ATR is flat and quite weak. That's actually been a symptom of this market for quite some time. In current market conditions, that's actually not concerning. Bollinger Band's also very tightly contracted, pretty typical market conditions at the moment. And I would be expecting to see some differences develop in this market. Some strange weaknesses begin to develop toward the end of cycle 5 if my grand supercycle wave count is correct. We should be seeing some strange things develop in coming months. On balance, volume supported the new highs in price. Not for Friday though, there's a single day bearish divergence. RSI has weak single bearish divergence. I am not giving much weight to this. When it looks like this, sometimes it just disappears. Likewise for stochastics. RSI is not overbought. There's room for price to rise. Stochastic is overbought, but it can remain overbought for many days before price turns around. MACD at this time frame, full bore bullish. Bollinger Band's tightly contracted. Okay, what about VIX and the AD line? At the weekly chart level, we've got this good midterm now divergence between price and inverted VIX. Price is making new highs, but the rise in price is not coming with a normal corresponding decline in market volatility. There is more volatility now than there was at these previous highs. Absolutely should be expected toward the end of primary 3. This is not going to be particularly helpful as a timing tool. I want to see something similar to what happened toward the end of intermediate 3 and the start of intermediate 4. Here we had these 3 weeks in a row where price moved higher for 3 weeks in a row. Good strong upward movement. Your inverted VIX for those weeks moved lower. We don't have that at this stage. We have this midterm divergence, but we don't have any of this at the moment. Let's look out. If we get another 1 or 2 of those along with midterm divergence, then a warning would be more loudly sounded for the approach of primary 4. We don't quite have that yet. Here's some midterm divergence here, but for Friday, upward movement from price had support from a decline in market volatility, no short-term divergence. What about the AD line? We do now actually have short-term divergence at the weekly chart level. Prices made new highs, but the AD line hasn't followed through with new highs. Now this could just disappear, or it could be a warning sign that primary 4 could be a little bit closer than I expect. That is possible, but I want to see that Elliott wave structure complete first. This could develop further though toward the end of primary 3. We did not have any reasonable divergence at the weekly chart level between price and the AD line at the end of intermediate wave 3. Let's look and see if we're going to get that at the daily chart level. At the daily chart level, at the end of intermediate 3, we did have quite a bit of mid-term divergence between price and the AD line. Here we do now also have this between price and the AD line. This is a warning that we could be seeing a more quickly approaching end to primary 4, and so using those those gaps as places to pull up your stops while you stay with the trend, keeping those stops as tight as you can and to reduce your risk. I know there could be slippage if this starts to move fast, but that's probably the best approach at this time, in my judgment, if you choose to take that advice. But my best, most solid advice I could give would be to stay with the trend. Don't try and pick a high. That's all from me at the end of the week with your S&P analysis, and I hope that all of our members are having a most awesome weekend.